Morning, everybody. I've just been walking my dog and having a think about the stock market and some conversations I had yesterday. And I just wanted to put a bit of an explainer about statements you might be getting, things that you might be seeing in the press. So we have seen interest rates rise a little bit, a couple of times. We're likely to see another couple again before the end of the year, the Monetary Policy Committee suggests. And the impact of this is twofold. One, it makes cash look a little bit more interesting while we're sitting in quite volatile times, or so it feels. The other is that a percentage of a portfolio generally will be in what they call corporate bonds or government bonds. So hang on, this gets a bit nerdy. So if the capital value that you buy a bond for is £100, it will pay a fixed interest amount. Let's call it £2 because I can do the maths then. So it's a 2% yield. That feels attractive when interest rates have been low. That's like, there's not much risk in that. 2%, better than the 1% I get at the bank. I'll have some of that. So the flip side of that is, as we see inflation rise, which we've seen drastically, and I'll come back to why inflation's risen in a minute, what you see is that interest rates go up to combat and lower inflation, to put a hold on it, to stifle it a bit. And what you see then is, I get 1% at the bank. That 2% at the coupon isn't quite so attractive. So what you see is the £100 value will fall to 98, 97, because you're still getting the £2 fixed on it, but 2 on 98 feels like a better percentage return. So it's pure supply and demand and who wants to buy it or not. So the capital value falls because the yield needs to be maintained at more attractive than interest rates. So what we've seen is corporate bonds fall anything between 10 and 20% over the last since January probably, and as a result of that, you'll see when your statements come through just now, the capital value of that corporate bond portion, which in a balanced or cautious portfolio is anything up to 40%, has come down. So you will see, oh my god, my portfolio is down 10% and inflation's up 10%. Oh my lord, this is too scary. It's okay, we've built it into the plan. Do you remember every 10 years I put in a market correction, a little marker? We stress test it. This is normal behavior for the stock market. So what I really want to say this morning is just don't panic about that. Inflation is quite high. In fact, inflation is high. Inflation is high as a result of two things. Supply chain issues in China. They still have a zero COVID tolerance. So if something happens in a factory or wherever, they send that person home. That supply chain, that production line closes down. So the demand that we have for normal products and things, that's why we've got such waiting lists. And as soon as you have a waiting list for something, the price goes up. I was talking to a chap the other day who wants to buy a new digger for his business. And what would have been 70,000 last year or year before is now 120 and an 18-month waiting list. Because people want them now, they're bidding the price up. So is inflation here to stay? I'm going to put my neck out and say, not really, but for a couple of years, yes, definitely. Will it go back down to 2.5, 3, nothing that we're used to? I don't think so, because we've all got a little bit used to, that's inflation. Price of petrol's gone up. Will it go through £2? Yeah, definitely. Will we get used to that? Yeah, we will. And so those prices tend to rise and stay a little bit, or not come down as far as they will. So I think we'll come down to probably more like a 4, 4.5. But it'll take a little bit of time to get under control and to get back to there. So I think the next couple of years might well be a little bit of a bumpy ride. But if you're invested, fabulous, stay there. It's in your plan. It's okay. I'm watching it. And if you're not invested or we're talking about investing, actually now's a brilliant time because, the stock market's 20% off. Wow, great. So if you're paying a regular into a pension or anything like that, don't stop it. Keep going, although it feels wrong, unnecessary, scary. And as always, if you want to talk about any of this, please just give us a call. I'm in and out of meetings quite a lot, but I am in the office and Em is there. So give us a call, book a time. I'll give you a shout back. Whichever. All right, I will talk to you all later. Okay, bye. Have a good weekend.